I'm all alone. No one besides me. Nah, I'm just playing, man. What's happening, y'all? Y'all know what tonight is. I've been telling y'all about tonight. We getting ready to get into it. The homie Q, Q is a busy man, so I ain't gonna waste a whole lot of time. I'm just gonna get right into it. Um, Everybody that's pulling up, I'm gonna shout y'all out at the end because we don't want to hold Q up. Before we get into it, y'all know I got to shout out our sponsors. I got to shout out our sponsors. You feel me? Y'all go to thenewtli.com and support our sponsors. Y'all know the Spider Gang, the apparel and accessory shop for all traders and investors. And then our second sponsor, y'all know who it is, Banjo. New music by Il Jodam on all streaming platforms. Quick disclaimer, this is not a paid promotion. TheNewTLR.com is me. And Banjo is music by my son, created in his bedroom right over there. Y'all support our sponsors, man. You feel me? Hey, y'all know what we doing tonight. We doing a special episode of Tim's Tidbit. We ain't doing no price action recap. If y'all want to see stuff about price action recap, pull up tomorrow. Tonight, we having a serious conversation about the markets. We had a few cousins that submitted some questions. I'm just gonna run my mouth about the stuff that they asked me. Eric probably gonna get fancy, and Q gonna make you think deep. So without further ado, y'all know who the gentleman is. I don't know where he at to y'all, but he right there for me. And then Eric right there for me, right? So that's Q and that's Eric. For those that don't know, Q do some of everything on Wall Street. He work on Wall Street. He do some of everything. And then Eric, that handsome man down there, he's the best financial at Jazz Wealth Management, jazzwealth.com, my personal financial advisors. He's the best fiduciary there. I'm saying that because I hope Dustin is on the live right now. Hey, but without further ado, man, y'all see who it is. I'm gonna let these gentlemen get to it. First of all, we got Q, Mr. Wall Street himself, and we got Eric Powell on IG or Jazz Wealth on IG. Q, you want to start things off, my man?
I mean, what you want to talk about first? Let's
we're gonna talk about what we're gonna talk about first. Let's talk about, before we start getting deep into the questions that the cousins like laid on our plate. Let's talk about the importance of understanding the landscape of what's going on in the market as a whole, as opposed to just trying to figure out how to be a day trader. What's the quickest way to get rich in this market? You know what I'm saying? Instead of just copying somebody else's plays and blowing your money. Let's talk about how important it is to understand what you're really getting into.
I mean, I think you have to think about it in this way. Like, you can't participate in everything, right? My mom used to say all the time, you can't dance on every scene. You can't go every part. You got to be very selective in what you participate in, right? So I think in the markets, you have to understand like the seasonality of the market. Not seasonality by investing, but like this time of year, right? This time of year, let's say it's summertime, everybody that has money is on vacation doing rich people stuff. So you taking the market super serious in August is the equivalent of me being mad at preseason football. Like, the market don't have no real games until September. So like a lot of times people miss the opportunity to learn the market because they're like watching it. Like, oh my God, this happened. The Fed said this. This is like, it's not actionable. So if you knew the seasonality of the market, you know that in July and August, it's very low volume. So anything emotional can swing the market. There's not much factual things that can swing the market because big money is not playing in the market right now. So it gives you an opportunity to understand what big money thinks or what the investors institutionally or individually who can weaponize their opinion, right? What they think, right? So you miss out on study time because you're watching a market that doesn't matter. So I can miss out on time with my family because I'm watching preseason football. It don't matter. I'd rather spend time with my family. A lot more fun, my mom and the people that I love, than me watching guys who probably won't be on the team this year, right? So it's the same premise in the stock market, right? Understanding the season, the seasonality, what you should be looking for, how you should think. Like, I mean, we've said this before, right? I think that's kind of the idea.
Mm-hmm. So, Eric, do you have any input on that along the lines of financial fiduciary that like specialize in like long-term planning for your clients. Do you have like your opinion on that or a different twist on that?
Yeah, absolutely. I kind of piggyback on what Q was saying there. Also, just full disclosure, I just moved. I had a really cool office set up at my house. I'm at the house now. I told my wife we just got in this place. I was like, hey, I need to set this up. And boy, if she didn't do it up some, I said, now don't make it look real feminine or anything like that. Man, she's got pink stuff on the wall.
Oh man. Oh, she hooked you up.
She hooked me up, but it's not real masculine for me. I was like, oh, come on, babe, But hey, it's all right. So
it's got a fun sway.
There we go. Yeah. It worked. It works. So no. To piggyback on what Q was saying, I agree. And really, just as an overall perspective, looking at the markets, looking at what people are doing. Just recently, we came off of a solid 4-week run of the S&P 500, really just coming off of that bear market territory. But what's happening and what you're seeing is, oftentimes they talk about a bear market bounce. People get really excited. They get that FOMO. And you've got to be really careful when you're watching the markets, not to just look at what, hey, we're seeing a jump. Everybody's trying to say, well, are we coming off the bottom? Or are we not? You really got to look at the stats. You got to look at what the numbers are there. I know Dustin talks about it a lot with Closing Beat. If you watch any of that, the idea that that really we're at a point where we were oversold. So if we're oversold on a lot of these stocks and people are still wanting to jump in, now you're trying to buy at the wrong time because, just what we're seeing right now, we're starting to see another downturn in the market. So you can't get too excited. You got to be smart with it. Like Q was saying, take it back, preseason football, don't get too excited about preseason football.
I'll jump on that, right? Like a lot of people get caught in value traps, right? Because like a lot of times, like you're so fiended out and you don't understand the business of the company. So like if you're a long-term planning, right, you may love some of these companies at the price action you can get them at, which is dope, right? Like, hey, I'm a 10-year investor. I'm able to buy some of these shares, right? I have excess capital, but most people don't even keep cash as a position. So you don't have capital, right? Because you're probably down in your portfolio because you're 100% invested. But if you did have cash and you're a long-term investor, well, you're happy with these levels. Why? Because you understand the business of them, right? Whether it's software, whether it's healthcare, whether it's oil and gas, really understanding the business and how these companies get paid. I can't emphasize it enough. It may sound repetitive, but that's the delineation between a really good investor and a person that's throwing darts in the market.
Yeah, for sure.
Yeah, for sure. I have zero input on that because that's why I hire people like Dustin and Eric. I let them manage my money for me long term, and I just play this fun game of trading in the short term. but I understand what both of y'all saying, because like I always tell people, I had on my shirt earlier, trade what you see. So I was about to tell people to trade what you see, but I'm repping for Jazz Wealth right now. Keep your dough straight, but I agree with y'all. Yeah, there you go. Keep your dough straight. I agree with y'all. You got to understand what part of the season it is. Like I like the analogy of the preseason. I heard you saying something about value, and one of the cousins was talking about how can you find the intrinsic value of a company. You know what I'm saying? He named a few big dogs in the market or whatever like that. But what kind of if somebody's trying to figure out like what a company is really worth, or is it worth their time to like look into investing? Is it what would be your spiel on it? Is it more so about like the value of the company now, or what you know what I'm saying, what you understand the company is possible the value is going to be in the future? Like what would be the take on that?
I think it's layered, right? Like, so think you gotta look at your fan base or your the base people consuming, right? So you have somebody who started yesterday and you have somebody who started 10 years ago, right? And I think the best analogy is cooking, right? Recipes or your grandma's recipe for something don't never taste bad, right? Because it's been passed down, right, year after year. Maybe you reformulate it, add a little extra seasoning. So I think I look at it like this, right? There's a little bit of an 8-step process in looking at a company, right? And understand the valuation of a company. You don't need to know what the company's value. You need to understand certain things. So at an advanced level, if we start at the top, if I'm looking at a company, I'm looking at operating leverage and CapEx spend, right? That's going to tell me a lot about the company, right? So if you have operating leverage, that means you have more CapEx spend. If you have CapEx spend, you're reinvesting in your company, right? So that's either share buybacks, dividend raise, you're buying physical property, right? You're doing things that are in the future going to increase the value of the company, right? So in certain sectors, say for example, healthcare is a really big CapEx spend. Not many companies say, hey, I want to have a cancer arm, I'm going to invest $5 billion. No, I'm going to go buy or acquire a company that has a really good cancer arm, and I'm gonna bring them in, and we're gonna do that, right? That's a part of CapEx spend, right? But that comes because that company has really good operating leverage, right? The margin on their sales, right? So the medicine, it takes $5 to make the medicine, but we charge $30 million for it, right? So we have a high level of operating leverage because we have a product that we make for cheap and we sell for a lot of money, right? Starting at the beginner level, let's go look at the 10Ks. Let's go look at the 10Qs. Let's find out what companies, right, are afraid of. So first step would be like, okay, what are you afraid of? So if I were to buy a house in a bad neighborhood and that house was $100,000 for a 10-bedroom house right in the hood, if I took my first check and I spent money on Jordans, you'd be like, you're bugging, Q. You need to buy a security system. So as an investor, if I go look at the 10K or the 10Q and they say, this is our competition and this is what we're afraid of, and they don't address that when I start looking or listening to earnings calls or watching interviews or reading on these numbers, and they're not addressing those holes in their companies, that tells me something from a beginning standpoint, right? So there's two different ways to attack it, because you can't give a flat strategy on how to do something, because there's somebody who's been investing for 20 years who I can talk to at a certain peak, and there's someone who invested yesterday who's like, yo, I don't know what CapEx spend means. I have no clue what operating leverage, these are acronyms, or I'm overwhelmed, right? The most important process is the person that's been there for 10 years has a recipe. They have a process. The person who's brand new, you need to create your recipe and your process, right? We can all agree on that. We can all agree we all need our recipe for success, right? And so I'll kind of give that analogy that there's not one way to do something to say, okay, I figured it out. I know this, then I know the stock's going to go up. No, I need to understand the actual business, where I am in my investment journey, as far as my mental, as far as what I understand, and then continue to build my recipe or continue to build my catalog in terms of my skill sets. And that's going to make you a better investor overall for a longer period of time.
Yep. Appreciate it. Eric, you got anything to add to that?
Yeah, I just think the idea, especially for investors, Tim, I know you do a lot with just short-term trading on this channel and talking. The idea that you have to be very careful, because if you're wanting to talk value investing, that's generally not a short-term trade whatsoever. So, you talk about the Buffetts and the people like that are out there that have built their portfolio on value investing. It's not a short-term thing. They're buy and hold strategy. That's what everything is. So anytime you're looking at something like that, really think through that. If you're just getting into the industry and you don't know, there are ETFs that are out there that are value, ETFs that you can actually snag. Let somebody else do some of the work for you. So then you're out there getting your stocks or your ETFs, so that maybe you're giving up a little bit of an expense ratio on it, but just the idea that you're not throwing darts if you really don't understand just what Q was talking about. It's all about, if you don't know enough about it, make sure that you're doing what you can to get by versus trying to just take a guess. I remember starting trading myself at 21 years old on an E-Trade platform back before everything was super sophisticated. I had no clue what I was doing. I was buying stuff and losing every day because it was the in and out stuff. So make sure, just as he says, you learn a process and you do that and you stick with it.
Yeah, I'll just say this, to the satellite theory never goes wrong, right? Satellite theory, if I take a ETF like QQQ, right? If I invest in Apple and Microsoft, right? If I want to invest in Apple and Microsoft, I don't have the money, I could buy the ETF, but now the ETF allows me to put pieces around it, right? And say, okay, now I can buy shares of Apple, because if Apple goes up, then the ETF goes up. I could buy shares of Microsoft. It gives me an index, right, to find a watch list. Because most and often than not, whether you're new or whether you've been in the game for a long time, really cultivating or really curating your watch list on what you should be watching, right? Like what stocks you should watch, how you watch them, how do you put them in sectors. ETFs do it for you. So you can say, okay, I'm new to this. I'm going to take this ETF. I'm going to break their sectors down, make my own watch list. I've been in the game for 10, 20 years, 5 years. You know what? I'm going to take this, and let's say it was TMT, right? Technology, media, telecom. I know that because I'm in the business, but I can now take that TMT ETF and segment it out to technology, media, telecom. So I know exactly what I'm looking at. I'm not comparing Netflix to Apple. I'm comparing Netflix to Disney. Like, I'm able to really kind of get more granular in my thought process, right? So again, like, all these processes are just put in place as checkpoints, whether you're new, you're in the middle, or you're older as an investor, so that you can recheck. And then if you make a mistake, you can go back and say, okay, I see where I made my mistake at. 99% of people never can identify the mistake they made, because their motive in the market has everything to do with money and has nothing to do with learning anything, right? So like, you can't identify, well, I shouldn't have did this, because you're moving so fast because you're afraid you're going to miss out on the money, and you're not really focusing on the knowledge part of it. And I say it all the time, because that's really what wins. Like, it's not, the money is cool, but if you're a cornball, you're just a corn with money. You can't uncorn. Right? Like, so it is what it is. Like, you're not having money don't mean nothing. You just got money. Like, that's it. So if you really chase knowledge, you're going to learn more, and you're going to have more structure in your process.
My little piece I was gonna add, you know what I'm saying, Q the big dog came through and stole it. I was gonna say make sure no matter where you at in your education level, if you're a newbie or if you're an old head, you already know this, but make sure you try to curate a watch list. Don't just jump in at any time. You want to get your watch list, and you want to go through it, and you know what I'm saying, strategize when you want to make your entries on this stuff, unless you just dollar cost averaging, and that's something different. But I appreciate that. So Eric, is it any of the questions in particular you would like to kind of address real quick, or you just want me to keep pushing on like I'm going?
You're doing great. If you just want to kind of keep plugging along, or unless you have a specific one that you want me to jump into.
Oh no, I'm just looking at them as we say something that like trigger me, and I read them off. Oh, this I want to touch on this right here, because we was talking about everything from like knowing like your time horizon, and knowing, you know what I'm saying, like buying and holding. One of the cousins was talking about they was asking me about like how I planned on doing risk management for my upcoming leaps when I get back into leaps, right? First of all, I want to say risk management for every person is different. You know what I'm saying? Risk management for every person is different. It's about what's your risk tolerance on, and you got to know the type of investment that it is. For like buying leap options, it's going to be a different type of risk tolerance that I have for like in my mom's portfolio that I manage for her when I'm buying these companies. You know what I'm saying? It's a different risk tolerance. So for my leaps, it's like I have a certain amount of my portfolio allocated for leaps, right? And then when I put it into that leaps, right, everybody know my risk tolerance. Well, everybody on the channel understand that my risk tolerance for my trading is I don't care how much money I make. I just try not to lose more than 2% of my overall portfolio in a week, right? If I lose more than 2% within that week, I stop trading for that week, right? For my leaps, right? The way I do it for my leaps, now mind you, like everything that from my small positions to my bigger positions, they're only a portion of my portfolio, right? So I got a whole pie, right? And let's just say I take 10% of that pie and it's allocated for leaps, right? So now 10% of that position, right, it's going to give me, let's just say I can get down 20% in that position, and that 20% will equal 2% of my portfolio, right? So for my short-term stuff, once I hit that 2%, I'm getting out and I'm stopping. If you know what I'm saying, if I do 2 trades, when I hit that 1%, I'm getting out of that trade. If I hit 1% again, I ain't trading no more that week. But for my leaps, right, when I get to 1%, I start playing defense, meaning I start playing short-term puts or calls, depending on how the market moving in that time. I'm playing defense for that position, right? And then once I get to the 2% of my portfolio, whatever that is for that leap position, right? I'm getting out of it if it get that far. But if it got that far, I did something terribly wrong. You see what I'm saying? For my leaps, because the leaps, the premium ain't gonna move that fast. But that's just how I personally do it. You got to figure out for your portfolio, how much of your portfolio you allocating for leaps, how much your risk management is for your overall portfolio. But that's just how I personally do it. My 2% is set for everything, but like for my leaps, instead of getting out at that when it hit that 1%, I start playing defense. And if it keep going and I get down 2 to 2%, then I'll get out. And the what I was playing in defense, that gets me back to above break even. So I'm profitable on the trade, even though I lost that trade.
No,
that's how I do it.
You gave him a lot, right? So risk management is a lifestyle.
Yeah.
So I'll give you an example, right? When you're younger, you don't have really good risk management, right? So like you wouldn't wear $100,000 worth of jewelry to the hood with nobody with you, right? Because you're gonna get robbed. If you don't want to go to jail, you shouldn't sell coke, right? Like, because then when the feds come get you, you're gonna be telling everybody, nah, it was John and them, right? But you shouldn't have been doing that, right?
6'9".
The older I get, the less I want to put my life at risk, right? I don't want to get on roller coasters. I'm not trying to die on a roller coaster. That's risk management, right? Like it sounds real. Like, you scared of no. Just my luck, right? The roller coaster would go off of the joint. I'm gonna die, and now I can't explain myself. And my biggest fear in life is dying and doing something I'm not supposed to be doing. That's risk management, right? Yo, why he was on a roller coaster? I don't know. And now I'm in heaven. I can't talk to you. I can't tell you why I was on a roller coaster. So it's a life skill. It's not like something with just leaps, right? Most people don't have good life risk management, just in terms of like, yo, I shouldn't be over here doing this, right? So you have to manage your life risk management first, because if you have really good life risk management, then you're very unimpressed by money, and your risk management when it comes to money isn't skewed, right? We have to like state our biases. So if we're having a conversation about music or about sports or about stocks, we all have innate biases. That will now affect our risk management, right? Because if I have a bias towards a team, I'm willing to bet on said team. It may not be a good bet, but I am biased. So I am now putting my money at risk, and probably money I should not be risking, right, on the line, because I'm emotional. It's the same thing with this. I just saw so-and-so post their account or a picture of something saying I made $100,000 trading whatever, leaps, future, whatever it is. I want to do that too. You're innately biased. What you're doing, risk management, the whole nine, because you have no experience, right? You've done nothing to trade or learn. All these platforms have practice platforms. Every platform, they got practice. You can practice, right? But nobody want to practice. Everybody want to take their real capital and jump right in the game. Yo, I seen Tim make 20,000. I'm gonna jump my dumb ass right in the game. I don't got no experience. It took me 5 years to save this money, and I know if I lose it, I can't pay my rent. But you know what? Tim just got a bag off crypto. We about to go run it up, and then crypto do something you don't expect crypto to do, and now you gotta go fund me because you gotta pay rent. So risk management is not an investment skill. Risk management is a life skill, because if you have poor life risk management, I'm 100% sure you have poor investment risk management, right? So it's really, really simple. Don't do no shit you're not supposed to be doing in real life. That means don't wear mad jewelry to the hood, because if you get robbed, I'm not going to feel sorry for you. Do not go and follow behind somebody and put $20,000 that it took you 10 years to save in the market because you somebody flip it and you lose it. Guess who's not going to feel bad for you? Me. I'm not. I'm still going to be shopping, taking trips, doing all type of fly shit while you broke. Yo, I don't care about all that. Keep your risk management in life the same as you do investing, and I'm sure you will not get booked and you will not lose as much money in the market. It's real simple.
Real simple. And that, that's my girl Michelle. Hey Michelle. Hey, now understand, when I say 2%, I'm talking about 2% of my overall portfolio value. Right now, like I say, 2% of my portfolio may be 20% on that leap position, because it's only a small portion of my portfolio that I got allocated toward leaps. So like, just like in the daytime when we talking about we give the example of we got a $2,000 account, right? And the 2% is $40, right? The 2% is $40, and then we go we buy some calls, right? We buy one contract, right? And to get to $40 on that one contract we bought, maybe 30% of that position, because you know what I'm saying, because of like the cost of the contract and the amount and the size of the position that we put on. So that position may be able to go down 30%, but that 30% on that position is only 2% of the portfolio. So that when I say the 2%, I'm talking about the overall portfolio, and it's all about managing your pie according, like you said. Some people don't keep cash on the side, so that when stuff come up, you can't do nothing. You can't even go shopping because you done went headlong into AMC on a margin account, and AMC done pulled back 80% on you, and now they margin calling you, and you going crazy because you down 150,000.
Don't sell coke if you not go to jail. If you don't have to fire a lawyer. That's just what it
is. Let's go into Eric, if you don't mind. I don't know if the chart that you got is tied to any of the questions, but let's talk about that because right now we're at a point where we're in a downtrend, and we're in a bear market, and we're having a nice rally right now. So and I think this is a different way to give people who's not just day traders, or who a different way to give them an opportunity to look at where can I start looking next to start planning my watch list and stuff like that right there. So is it actually tied to any of the questions that we have, or is just just a gem you're gonna share?
Nope. So we can tie it into everything. So
Okay.
so really, first of all, what this breaks down is a lot of different sectors. So when we go back to what we were talking about with, value investing or buying ETFs, different things like that. So instead of looking at one individual stock and saying, hey, maybe this is a hot stock, instead looking at just sectors as a whole and saying, okay, what has been beat up really bad? And so this chart right here shows just that off of the 52-day high. So this chart we actually showed yesterday in our live stream. So this is coming from yesterday's feed. But the idea here is that if you're looking at this chart, it's showing you really which sectors have been beat up the most. So where are you wanting to put your money? There was a question of, hey, where should I be putting money maybe in this down market? Now, if you aren't experienced at all, you're not experienced in anything. I mean, Warren Buffett said it best one time, just go buy an index fund and let it ride. That's okay. But if you're looking and you're really wanting to analyze this a bit and look at different things, I mean, you could see, the communication services, consumer discretionary, both of those have been beat up extremely bad. Healthcare has been one that's, coming off the highs, especially COVID times, coming down now. So you can look at just the standard S&P 500 in the middle there. It's only down 19.6 off the 52-week high versus some of these others far less. So really looking at this and trying to follow, because if you go to the far right, and I've seen some ETFs and the utility sector on that far right, only down 3.8%. A lot of that's dividend driven. These utility companies oftentimes are producing dividends, which are helping to keep them afloat. But at the same time, maybe you're looking at things and it's like, well, what do I want to buy versus what do I want to avoid? Well, if utilities are only 3.8% down off a 52-day high, do you really think that that's the one that you're going to buy in and it's going to continue to just shoot up? Probably not. You look at the other side of things, it may not be right away, but in time, you're looking at buying low, selling high. So this chart kind of gives you just a snippet of that. Not a recommendation, full disclosure with anything, but it's really just to analyze for you to get a little bit of a food for thought to potentially where to put your money. Because I know that was a question, definitely. Where should I be putting my money in this downturn?
So can I jump in?
Yeah, absolutely.
All right. So for the people who are a little more advanced, right? Like those are sectors. You have to understand the subsectors. So in healthcare, for example, you have med tech, biotech, biopharma. You have healthcare managers, right? So United Healthcare doesn't do the same thing that Veritex does. And, You know, if you understand, okay, Inspire, right? There's a bunch of different companies. Understanding the subsectors in each one and what affects them or how the economy affects them, right? So like we can look at healthcare, energy as them being defensive plays, right? But they're unique defensive plays because there's some CapEx spend there. There's some opportunity for merger acquisitions. There's some growth in that defense. Most of the time, like utilities, there's not much growth there because you're only there for a dividend. Whereas these other areas have some kind of level of growth. Be it whether a company can make a purchase or acquisition, or be it they have a high level of CapEx spend, they might raise their dividend, they might buy back shares at the low, right? It's a great time to buy back your shares when you hit the low. So it makes it really intriguing to understand these subsectors and what the premise is of how they make money. Consumer discretionary, right? Like understanding Home Depot versus Lowe's. Really two really good ran companies, right? But like understanding like what does Lowe's do? Lowe's is a do-it-yourself provider, right? So a lot of their money is made on the do-it-yourself. Home Depot, more small business, right? But recently, Home Depot has been biting into Lowe's do-it-yourself. They've taken some market share there. That's made a very interesting conversation. Well, why is the stock down? Well, the stock's down because we're in the economic environment in which the cost of capital is really expensive, right? Which means supply chain is really expensive. So they're getting banged over the head with supply chain costs. They're getting banged over the head with commodity costs. They're getting banged over the head with the consumer who doesn't have as much money as they had 2 years ago or a year ago, right? But really strong management teams. I want to say that Home Depot has, and this is not, don't go buy because I said it's not a solicitation to buy. Home Depot has a really great dividend. They have a $7.60 dividend per year, which you break into fours because you get a dividend quarterly, right? So you have a really strong dividend that constantly goes up, right? And you have a company, I just broke down exactly what they do well and why they do well. So you have intriguing names within the subsectors of these areas for the people who are more advanced to really get into the subsectors and understand who is competing with who. Because at the end of the day, Home Depot is not competing with Chipotle. Right? Like they're not competing. Just because you're consumer discretionary is not competing with you. Just because I live in New York don't mean I'm your friend. Right? I might live in a different part of New York. You can't bunch this whole together. You have to understand where the competing lines are and what affects the stock that you're looking at or even the multiple stocks, right? So just wanted to add that for the cast that really, you know, are a little bit more in the trenches.
Yeah, and with that too is just what he was saying here. You've got to be careful because when you do start to break these down into the different portions of that sector, you start looking at the Home Depot and the Lowe's and things like that. Well, now you've got to look at the housing trends also. You've got to look at just what you're talking about, you know, having that liquid capital. I mean, in 2020, everybody had free flowing cash and you saw these profits just continue to go up on Lowe's, Home Depot, all of these companies because of what was going on, nobody having anything else to do. So really, it's if you're going shopping in times like this and you're wanting to break it down, make sure that you're doing the research, you're doing the homework to know what's going on and what's affecting each one of these subsectors within that full sector.
For sure. Appreciate that. I know somebody was asking about like somebody was asking about like where the what sectors or stocks, something to put money in portfolio. One of the questions was something like that. So I'm glad you brought that little gem of a chart there. And if y'all don't know what Eric talked about when he say we did on our live stream, it's Jazz Wealth on YouTube. It's Jazz Wealth Managers on YouTube. I believe I put the link down below. Y'all know who Jazz Wealth is. I talk about them all the time. We got about 5 or 10 minutes left. So what I'm gonna do, we're gonna touch on one more from what the cousin submitted, and y'all put some questions in the chat. So, and I'm just gonna pick one out the chat randomly. We're gonna touch on one more that they submitted. I'm looking at them. Make sure I look at. Oh yeah, and the people that was talking about like LLC type stuff. Talk to Eric about it. He said that's more so on in the CPA vein. You know what I'm saying? That's in the CPA vein. He's not a CPA. So that's in the CPA vein. Contact your CPA and figure that out. We're going to talk about this one here that I have no clue about, right? And then, like I say, y'all put anything in the chat that y'all want to know. One of the cousins want to know about how will the 87,000 new IRS tax auditors actually impact households making below 400K. I have no clue. Anybody have any clue on that?
I'm gonna tell you right now, for all y'all that was PPP scamming, y'all going to jail. The Fed's coming for y'all. Y'all going to y'all getting locked up. Now let's talk about it real quick, right? And I don't want somebody to go to jail, But if you think about inflation, right? Part of inflation isn't just the fact that we had a pandemic. Part of inflation isn't, what's happened with the war in Ukraine. Part of inflation isn't like, part of inflation is they gave y'all money, right? And people PPP frauded their way 30,000, 100,000, right? And what they do, they went and bought designer. You know what happens when you buy designer? They don't make more designer. They just raise the price, right? So the Louis bag that was $1,800 in 2019 is now $2,700, right? The price goes up because people took money from the government, right? And they didn't spend it how they said they were going to spend it, right? On small businesses. So people didn't get the money that they needed. Then they gave you stimulus checks and cats blew the stimulus checks, right? So that goes into inflation. So when I say y'all going to jail, they bringing them cats in there because they know it's an excess amount of money that is floating around our economy because the whole city of Chicago did PPP fraud. Your cousin did it. Everybody was bragging about it. It was all fun and games. It's not fun no more. It's not fun when Biden said, "Yo, we're gonna move that jurisdiction 10 years out," right? Because that had an effect on inflation. So yeah, we're gonna have inflation troubles, but that put a little extra chocolate sauce, whatever you want, the banana on top of our inflation. So it is going to affect folks if you weren't doing the right things. If you doing what you're supposed to be doing, you got nothing to worry about. I was doing what I was supposed to be doing. Yo, I sleep good at night. I be knocked out. Drool all over, just drool knocked out, just all type of sleep. Because I wasn't doing nothing crazy. So if you was doing something crazy, I suggest you get your flight out of the country. I think the Cayman Islands or Switzerland don't have an extradition treaty or something like that. You go over there, because if you did something wrong, they coming for you. You're gonna be on cops 2.0.
Bad boy. What you gonna do? Hey, I appreciate that, Q. Distant Warrior, market leaders, dogs of the Dow. That is different. Like investment strategy is different. It's up to you if you're looking for it, if you want to buy strength or buy weakness. That's easy. Ryan, we answered that question already. The short version of it is layers to the game, and if you ain't too savvy at it, look at ETFs and it's for the long term. It ain't about short term. We answered that. Hit the rewind and go back and check it out. I don't see no other questions in there. So real quick before we get out of here, one of the cousins was talking about if you knew and building your family financial plan, what steps you should take. My quick answer on it is have a plan and execute. Have a plan, execute. The way me and my wife did it, we laid out our plan. We figured out how much we wanted to have in emergency cash. We started paying off debt and execute. That's it. We figured out how much we needed in emergency cash. We started paying off debt and we had our plan laid out, what we wanted to do, and just start executing the plan. The first thing I always tell people is start with budgeting. People always want to look into, what I'm saying, how can I start with budgeting? If you don't know how much coming in and how much going out, you fighting a losing battle. Start off with budgeting. Figure out your budget. Get yourself to a balanced budget or at least a surplus budget. If you're budgeting a deficit, figure out how to decrease that debt immediately, right? If you got a balanced budget or a surplus budget, then start figuring out what you want to do long term. What's your long-term goals? Figure out your numbers that you need and invest and save for those numbers and live your life happily. Don't overinvest, don't oversave. Invest and save and live your life happily.
Let me jump in real quick, right? Budgeting is dope. I think that's dope. There's two things. I live in New York. It costs $50 to breathe. So when I wake up in the morning and I check my phone, it already took $50 out of my account just to breathe air in New York. That's how expensive it is here. So it's not just about budgeting. It's right. The difference is find out ways. Don't try to pinch pennies. Find out ways to make more money. Yo, people will spend 89 million hours trying to pinch pennies rather than figuring out new ways to make money. Right? Like that doesn't make sense. So yeah, let me figure out XYZ. You might need to leave the state that you're in to go to a different state that has a different cost of living because it works better for you. So if I live in New York and it's too expensive, Texas look good. Georgia, certain places, that have a different cost of living that I may have better metrics, and then that's going to allow me avenues to make more money, because it's not just about budgeting, but you need to budget, but also figure out different avenues to make money. Everybody's too good to figure out different ways to make money. You want to have that one stream and then just trade. Like, nah, some people, you got to have 5, 6, 7 streams. And the only way you do that is to go outside and look. All right, you know what? Instead of me trying to figure out how to save $2, let me figure out how to make $2,000. A lot more powerful, right? Like, we don't have that conversation about our mindset in that way. So as opposed to me saying, hey, you know what? I'm not going to get the Starbucks iced coffee because I'm going to save $3. No, I'm getting the coffee, dog. I'm going to figure out how to get the bread. So if I want something, I'm going to get what the hell I want. And then I'm going to go figure out exactly how to make more money so that when I get that item in the future, it's not even a big deal. That's like cash, right? We have to have that mindset too. Don't only budget, but also look at your skill set in your life. That's not just making money, trading the market, but your actual life skill set. We all have skills on how you can make profits on your skill set, on who you are, what you have around you. And then if the environment isn't conducive, what environment can I go to that's going to allow me to have that conducive budget environment while chasing or getting more money? That's going to add to your wealth a lot faster, and we kind of don't have that combo.
Mm-hmm. That's good. And I'm Q. I know you got to get out of here, Q.
Yeah.
I just want to say this to Perry real quick. When I talk about budgeting, Perry, I'm not talking about in the sense like I broke this down for the youth when I was teaching them. I'm not talking about it in the sense of what we think about when we first hear the word budget, meaning like Q said, don't start penny pinching. I'm not talking about it in that, because when we think budget, we think, okay, I got a penny pinch. When I'm talking about budget, I'm talking about what a budget actually is. When you track the money coming in and how it's going out, you just tracking the money. That's all I'm talking about. You knowing how much income is coming in and how much is going out for expenses, for leisure, for investments, for saving. You track, you know where your money going. That's what I'm talking about when I'm talking about budget. Because I see you said it's not a budget problem, it's an income problem, right? So if it, like Q said, if you living in a state where you can't afford to stay there, right? Okay, yeah, that's an income problem, right? But you can still budget in that. Now I know I got this amount coming in, but it costs more for me. It's more going out for me to actually live here. Now I know I need to reduce debt some kind of way. It might be, like you said, moving to a different state. It might be, you know what I'm saying, getting a better paying job or getting another job or getting, you see what I'm saying? It's like, but you have to figure out, if you don't understand how much going in versus how much going out, you're fighting a losing battle anyway. You need to know that up front. That's just my personal opinion. You need to know that up. And when I say budget, I ain't talking about penny pinching or scrimping. I'm just talking, treat it like a business. When business run their budget, they know how much coming in, they know how much going out, and they keep, you know what I'm saying, they keep a balance sheet. Keep a balance sheet.
And the lifestyle creeps the big one you got to watch out for though too, because you got, you know, hey, this is where my money is. But then you start making more money. You can't then say, well, you know what? Now I'm going to spend even more money on just random things. That's where you got to find the ways to save. I always like to say, start with your savings goal, especially like coming out of college, anything like that. Hey, I got my degree. I'm going to go get my job. Well, what are the people, the first thing they do? They don't start saving. They start spending. Well, so start with the savings plan that's going to meet your long-term goals. If you can do that, then go out and figure out, okay, this is what I got to operate with now. You know what? If it's the Starbucks and that's fine and it's not going to hurt you, then go get the Starbucks. But as long as you're hitting your goals, nothing else matters. But the first thing is figure out what the goals you want to hit and hit those.
Okay. Hold on one second, Eric. Q, I know you got
Yes,
to go, my guy.
Yo, I appreciate
you. Yeah, I appreciate you for pulling up. I'm probably stick around for a couple more minutes with Eric. You got a couple minutes, Eric?
I got a couple minutes.
Yeah. All right, I'm sticking around for a couple minutes with Eric, but I appreciate you, Q. Anything you want to say before you hit the door?
Yo, it's a pleasure just to be on the platform. You know, I rock with you. I appreciate you for not having repetitive conversations. I give you your flowers. There's not many people out here doing like you. I gotta give my man PDub his flowers. Yo, shout out to PDub. Not many people doing like PDub does it. You know what I mean? Keep on being you. Keep on, you know what I mean, your energy, who you are. Yo, Eric, pleasure to meet you. But keep on being you. You know what I mean? And make sure I give this man his flowers, because not a lot of cats is moving like how he's moving. So make sure y'all give him his flowers because he's been doing this off the strength, and it's not many people with pure intentions, man. So with that being said, I'm out of here. You know where to find me. Eric, pleasure to meet you. Yo, thank you. You already know, man. You family, so we locking anytime.
For sure. Appreciate you, Q.
Easy.
And for anybody who don't know, it was Q. It was it was Q idea, Q, because I was gonna have this mega come together, 100 people on the stream just talking, and me and Q was on the phone, and he was like, "Yo, Tim, it sound good, but I think the meaning or the message will get lost." And pretty much to sum it up, it's like he made me realize people would just be coming to see their favorite social media person as opposed to just getting the information that we trying to share, right? And so that's how it ended up just being me, Q, and Eric, because I was like, you know what you write, and I tried to figure out what would be the best conversation that we haven't seen already as come up cousins, as S2F family, as family that's in the shadows, family, you know what I'm saying? All the different communities we got out here, trappers, you know what I'm saying? Pandas, everything. Like, what conversation have we not heard yet? And this was the best conversation that I could think of, being, for one, because Eric has never been on Tim's Tidbits, you know what I'm saying? And I know he's a freaking genius. Q done pulled up before, but we've never seen Eric and Q together. You know what I'm saying? So it's like, it's all about talking about stuff and hearing it from a different aspect, because it kind of makes stuff click in your mind, And Eric, I appreciate you, man. I'm starting to sweat. I got on a long sleeve shirt. As y'all see, I'm repping Jazz Wealth tonight. I'll rep this one. And for anybody that came in late, this is wrong side. This is
switching it
he
up.
acting like Dustin. This is Eric Powell. He's one of the financial fiduciaries at Jazz Wealth Management. That's my personal financial advisors. They like I said, they are fiduciaries. They specialize in long-term. They manage their own portfolios, meaning they don't just go buy mutual funds or ETFs. They sit down and, you know what I'm saying, they plan stuff. They put it together. I'm happy with what they do, and plus they educate you. If you don't know, like, you should know, because I say this all the time, right? If you don't know, if you go on YouTube, let me put my screen back up. If you go on YouTube and go to Jazz Wealth on YouTube, this is what their YouTube look like right here. Jazz Wealth Managers, right? That funny looking guy there, that's Dustin, and then this dude over here, that's Eric. And every day they post fin tips. Every single day they post fin tips, and then they go live 4 days a week, Monday through Thursday. Dustin does the closing beat, but they do fin tips every single day. The good fin tips be the ones that Eric be on. You know what I'm saying? Oh, they're just jokes. They're just jokes. Over that Jazz Wealth, it's like they got it where the advisor that you talk to in the beginning, that's who you stick with. Everybody can help you, but unfortunately I got Dustin. You know what I'm saying? But if y'all looking for a financial advisor, I highly recommend. They my personal financial advisor. Eric, I appreciate you for pulling up. I appreciate you for lending us your knowledge tonight. I know it's like past your get off time. Tell your wife I appreciate you.
Right.
Appreciate her for letting you hang out with us, and I appreciate her giving you the fun shui right there behind you. That's real nice. Man, do you got anything for the people before you get out of here?
It's cute. It's cute. so no, I appreciate it, Tim. I appreciate you having me on here. It's been great hearing from Q. I mean, the guy's a wealth of knowledge. It's a great resource to have as well. Tim also, with what he's doing for everybody, this is awesome. Educating, just getting out there, teaching people. I think the biggest thing is really making sure that what I tell people is with the fun of trading and learning and doing things, get your long-term plan set, get your goals set, because everybody wants that get rich quick. Be careful with what you're doing with your money right now, because You know, the get rich quick is also the get broke quick. You know, everybody you can hear about when crypto's going up, all these things are going up because that was a huge one just recently, and all of the money people were making. But now anybody who got in and they say, oh, well, you know, Bitcoin's going to 100,000 and then ends up at 20 some thousand. So just be careful. Have a long-term plan in place. Meet your long-term goals first. Then start playing. What I tell people is we have clients that trade all the time on the side. We handle their long-term stuff. And what I say is, if you lose all your short-term trading stuff, and you know what, there's no sweat off your back because you're meeting your goals with the plan we've built. But at the same time, if you win big on the long or the short-term trading, then guess what? You celebrate big time because you can retire earlier. You've met your goals earlier. There's a lot of that can be done there, but just don't take excessive risk with money that you can't afford to lose. Be careful with it. Have that long-term plan in play, and you know, stay with it, because when you put $10,000 in and it goes up 10% and you made $100, or you made $1,000, okay, awesome. When you have $100,000 though and it goes up 10%, now you made 10,000. When you have $1 million and it goes up 10%, now you made 100,000. It's compound. It takes time. It's not just a short-term play always. So just be patient with that, and really you know, stick with it though, because I mean, that's where it's at. Stock markets made a lot of people a lot of money long term.
Mm-hmm. That is true. Hey, real quick before I really wanted to and I totally forgot that I wanted to touch on this, because I see people talking about it. I got some people that I consider friends that swear by it. You know what I'm saying? But what's your take on since you know you're a long-term financial planner, right? What's your take on like the whole life insurance thing?
All right. So I'm about to see these comments blow up, is what I'm about to see, and not happy.
Nah, we'd be all right.
So here's the fact. You've got to be very careful. I actually, just to give you background in this, I started in 2015 in the financial industry, and I worked for a life insurance company, and they allowed us to do, you know, start, you know, talking with people, managing investments. We would link with people, but the big thing was life insurance. It has been spun 1,000 different ways. Bank on yourself. You've got, you know, what are all these different ones? The universal life things that they're saying now, all these different strategies. The issue with this is that no matter what way, shape, or form you shake a stick at this, life insurance is life insurance. It should not be thought of as an investment, because the returns are not, I don't care what people show you when it comes to an illustration. The breakdown is there's a lot of dangerous stuff when it comes to this, because the insurance company is always going to make money. They've got that figured out. Yes, you can put it in. There's tax strategies to do all this, but people are putting money in life insurance for all these other strategies when they're not even maxing out a Roth IRA. $6,000 a year goes into a Roth IRA. Yeah, you're going to pay the tax, and it's going to grow tax-free. That's your money that you can always have and access. From there, think about other things. What I'll tell you what the true millionaires are doing, the Elon Musks of the world are doing, the billionaires. They're borrowing from their own investments. They have accounts. We have stuff that we're setting up now where we're doing that with clients that have over, I believe it's $100,000 or $150,000, where they're actually able, if you have a taxable account, you can borrow from it from a super low rate. Your money stays invested, and then you're able to slowly pay yourself back. It's the same concept. The issue with these life insurance policies is they'll pitch this, but number one, they're not incorporating in the fact that there's a high insurance fee that's always there no matter what. And the second thing that it's not being incorporated is they're not telling you oftentimes when you're paying yourself back on that loan, there is a 6% interest on the loan from your own money. So if that's the case, then why not go to the bank and get that 6% loan? It's a very dynamic thing that could be talked about. I could sit here and go into detail on this a lot. I'm actually working on, I've done research. I have some things that I've done. I have not produced a long form video of this. I will be doing that for our channel in the near future because I've had people request it. I am working on that to really show people a bit more on this, because I think what is happening is, especially the people who are scared to invest in the market, people who have a fear of the markets, are the ones that are the prey. They're the ones that are actually getting preyed upon. and they're going after them because they say, well, you know what, let's sell this on fear. Guess what? Your money's never going to go down in whole life or in a universal life. We're able to do these strategies. And what ends up happening is the people who are selling it to are you making a large profit in a short amount of time. They're not required to do what is in your best interest. They're only required to sell what is suitable for you. So that's a total soapbox. Tim, I could go on for days on this. Forgive me, but
no, you good.
I know everybody has different opinions on it. I'm telling you from my direct living it in the industry and seeing it, and even going I'll share a little secret on what I did. I went undercover. I felt awful for doing it, but I actually went undercover and I actually contacted one of these very reputable companies and went through all of it and all of the illustrations they showed me. And I did it as though I was a semi-wealthy person, not just somebody out on the streets that's just getting started, because they're going to sell you these policies. And if you don't have a lot of money, there's no way to get to where you need to be anyways in that policy where they're trying to promise you things. So just be very careful with that in general. So that's what I would say.
Yeah. And I appreciate your take on that. Being, you know what I'm saying?
My daughter just came in. She just got home. So all right.
Okay. Yeah, we about to let daddy go. I
All right.
appreciate your input on that, cause me after Dustin put out in the dojo that you guys were setting it up, where you know, being able to borrow against your assets like that. I was like, oh, and I asked the question. I say, so, you know what I'm saying? If me and Calandra got fired a long way, can we like borrow something? And he was like, now you think, now you get it. And I was like, oh, so that I want to do what the rich boys do. You feel me? So I appreciate you on that, because I'm in the mindset of borrowing against your investments, you know what I'm saying? And all of that front load and insurance and all. I ain't with all that personally. I just ain't with all that. I know, you know, you a professional, so you can't be like, nah. But you know, you got to stay politically correct. But I could be like, man, get out of here. But I appreciate you. I see your baby coming in there pulling on you. I ain't gonna hold you up no more.
Well, thank you, Tim. Tim, I was gonna say one thing I saw in here, and it mentioned term life insurance. I'm gonna tell you something. Get term life insurance. It's cheap, especially if you're healthy. Get it, cover your family. I carry a lot of term insurance for my family. I have large aspirations and goals, and I'm saving and I'm meeting what I want to meet eventually, but I'm not there yet. And you know what? If I die today, my family's going to be taken care of. Get the term insurance, but don't go do the other stuff. But all right, go ahead. So
me and Calandra both, we got term policies on both of us. We got stuff because she's still working. We got stuff through her job. We got our own personal term policies. We got some of the Gerber plans when the boys were babies. We got that for them. So when they get 18 or whatever, they got a little bit of money. We got all kind of stuff in place. We plan stuff out, but you know what I'm saying, we just ain't rich as PDub. That's what that my partner PDub, he was talking about term life. That's him right there. That's what partner PDub. We ain't rich as PDub. That's who Q was talking about too. But again, I appreciate you, Eric. Keep doing great and wonderful things for myself and my family and all the rest of the Jazz Wealth family. Thank you for putting up with Dustin. Thank you for hanging out with us. They call us the Spider Gang, in case you ain't know. They call us the Spider Gang because awesome. I swing trade and day trade the spy, and then they call the spy the spider, and so we the Spider Gang. You know what I'm saying?
There we go. Well, thank you, Spider Gang, for having me. I mean, it's been a pleasure. I've enjoyed it. Tim, I've actually got to meet Tim in person. He's just as cool in person as he is on here. So just a great person.
I appreciate you, man. And everybody, I'll see y'all in the morning. We're gonna do the overnight price action recap in the morning at 9 o'clock. And then what's tomorrow? Wednesday? Yeah, tomorrow Wednesday at 7:30. Yeah, then 7:30 we're gonna do the price action recap. So see y'all in the morning at 9 o'clock. Go ahead and take yourself a brain break. Hug your family. If you got grown kids, call them on the phone and say, hey, I'm thinking about you. If your parents still here with us, call your mom, call your dad, say, hey, I was thinking about you. Go in there, kiss your wife, hug the dog, slap the kids, whatever. But just enjoy your family, man. Nobody promised tomorrow. Tell somebody you love them. Eric, I appreciate you. Everybody, gone, man.
Thank you, Tim.